With a part two of this week's lesson, we're going to expand now on FICA taxes, the Social Security and Medicare parts. FICA standing for the Federal Income Tax Assist Program. So when we first start out, just some keyword that you need to make sure you understand when you're dealing with payroll is the difference between gross pay and net pay. Gross pay is what you actually earn on the job. That's say $11 an hour would be your gross pay, but your net pay would be something more along the lines of $9.50 or $9.80 an hour because of the taxes or in any other withholdings you have taken out of your paycheck. That's also known as the take-home pay. As we go through this lesson and throughout the rest of the semester, I'm going to be using EE and ER quite a bit just in exercises we do. And I just want you to be familiar with what those terms mean. Employee and employer, it's the easiest way for me to abbreviate those. So this week, we're going to really delve into the Social Security and Medicare aspects and how it deals with payroll, especially when there's some items that aren't taxed. And then there are things like Social Security, which has a cap. And as we had saw last week in week one, we're going to continue on with the employer taxes as well. We're going to continue with 2 journal entries. So the first thing that we need to look at is the Social Security. If you see this if you're reading this in some kind of a book or as well, it's also known as OSADI. That's the same thing as Social Security, and you can see what it stands for here, the Old Age Survivor Disability Insurance. I'm just going to refer to it as SS or Social Security. I won't refer to it as the OSADI. And Medicare, the book or other sites will sometimes call it HI for hospital insurance. I will always refer to it as Medicare. Key things that you need to remember for this class and for anything in payroll, the payroll percentage does not change year to year, and it hasn't changed for several years, even decades. The Social Security is taxed at 6.2%. The thing that does change is the cap. If you're watching this video in a later semester, meaning in 2020 or 2021, always refer to what my notes have. Do not necessarily reference this number. Whatever the cap is in my notes, that is the cap we are going to be using for that class. Sometimes we will be a year behind, but most of the time I'll try to keep up with the year that we're in. So this year, for at least the fall 2019 and spring 2020, we'll be using the 132,900. That's the number we're going to need to memorize. And you can see in previous years, it does go up, not a lot, but it does continually go up every year based on inflation. So 127.2 up to 128.7 and now 132.9. So we're going to base all of our calculations on that 132.9 as we continue on here in a few examples. So once the individual hits this cap in their actual wages, not in Social Security paid, that would take forever, but in your wages, in that person's wages, then we no longer pay Social Security tax for that employee, neither the employer or the employee. And we're going to see what how that's calculated here in some examples coming up. All right, you can read through some of these fun facts and how the Social Security is established. We're going to really delve into Social Security next week in week 3 and look at lots of different levels of Social Security. But right now, we just wanted to touch on the basics. That Social Security, the things you need to remember, 6.2%, and then the cap for the year that you are watching this. And in our current year, it is 132.9. Medicare is the second of the FICA taxes. And that one, we need to memorize the percentage. It doesn't change as well. It doesn't change for years and years and years. 1.45%, no cap on it. So we're always going to tax our employees at 1.45%. And that's basically going to go towards Medicare, the hospital portion of those to help pay for the insurance of hospital costs. Notice what I have here in blue, that back in 2013, with the Obamacare being enacted, more money needed to be raised and put into Medicare. So what they did is tax the high income a little bit more, not a lot. It's an additional 0.9% on all the wages that are over 200,000 for those who are single or head of household, and 250 for those who are married filing joint. So what that means is let's say you were single and you made $201,000. The first 200,000 would be taxed at the regular 1.45%, and then that last 1,000 that you're over the amount would only be taxed at the additional 9%. So you would be a total for that 1,000 of 2.35%. So what I would like to do is, just to make sure we have that, let's try an example. If I have a married filing joint individual earning $400,000, I want you to take the next couple minutes and calculate how much Medicare tax should they have been paid this year. And what the employer will actually take out what they deem, but then when you do your actual tax return, it'll make up for any pieces that you might have to pay extra because it wasn't taken out of your check. So go ahead and try this, and then in about 4 or 5 seconds, I will show the answer. Go ahead and pause the video at this point. Okay, so for the answer for this one, remember, married filing joint, they don't have to pay the extra tax until they're over $250,000. So $250,000, the first $250 is taxed at the 1.45%. And then the remaining $150,000 to get us up to $400,000 is taxed at the full amount with that extra 0.9% added in. So in total, our Medicare tax is $71.50. That's what you should have came up with. All right, so remember, FICA taxes, as we've already seen last week, they're paid by both the employee and the employer. So both journal entries have Medicare and Social Security, and whatever it is for the first one, it's going to be the exact same for the second one, even when caps are hit. All right, so let's go down and do a couple examples. First, a real easy one, and then we'll start looking at when caps are hit. All right, so for this first one, all I want you to do is just to revert back and to remember Social Security Medicare rules, and shouldn't take you more than about a minute or two, and tell me how much in Social Security and Medicare taxes would be withheld from this person's pay, knowing that they've already earned $20,000 this year. So pause the video and let's see what you get. All right, so the answer on this one, very straightforward. The only thing that you really needed to work out was, well, how much pay are they getting? 40 times 15, so that's $600. They're definitely not over the cap, so 600 simply at the 6.2%. Medicare, 600 at the 1.45%. So the two amounts that this individual would have taken out of their check: $37.20 for Social Security and $8.70 for Medicare. Now is where we start hitting the cap, is on lecture example number 2. I'll walk through this one just to make sure we understand how a cap is assessed. So as you'll see, that this individual here is very close to the cap. The cap, remember, for Social Security is $132,900. So if we add in $5,000, this current pay, they're going to go over the cap. However, that doesn't mean that none of the wages are taxed, but it does mean some of the wages are taxed. All right, let's go into my answers and we can see how this is worked out. All right, so I always like to do this in 2 steps. Step 1 is simply a yes or no question. Did the person go over the cap this year? And I didn't quite put in the numbers right. This should be $130,700. And so this one is $135,700. So the answer here is yes, the individual went over the Social Security cap. Social Security cap is $132,900. This pay takes us to 135, which is now over. However, once I have a yes or no question, if I answer no, then I just simply do as we've done before, all the pay times 6.2%. However, if we do answer yes, then we go to step 2. But when we go to step 2, we forget everything we just did in step 1. Seems kind of silly, but that's what you have to do. So in step 2, forget everything we just did, and what I want us to do is always take the cap, the 132.9, and then subtract out where are we before this most current pay, meaning how much income is left to be taxed before I hit the cap at 100%. So when I take the difference here, we still have $2,200 left to be taxed. So $2,200 at 6.2%, that's how we'll get the Social Security. I do not take the full $5,000 because the full $5,000 took us way over the cap. I want to know what takes us exactly to the cap and then stop. Now for Medicare, there is no cap, so the full $5,000 is taxed. That's how you handle a situation with Social Security and hitting the cap. Now, as we get to lecture example number 3, I want you to then now think, how much do we have in the Social Security and Medicare account that we need to pay for our FICA taxes to the IRS? How much do we actually have after this payroll is assessed? Go ahead and pause the video and think about that for a second. Well, after this one, it's a no-brainer that we have these two amounts from the employee, but remember the employer also has their share. So not only do we have the 136 and the 72, we have that times 2, the 30. What I did is I took the third, let's see what I did. Make sure total Social Security. Oh yeah, I'm sorry. I didn't read it right. From examples 1 and 2, not just example number 2. So let's just do example number 2 while those numbers are still fresh in our head. The 136 and the 72. So employee number 2 over here, the 136 and the 72. Notice I multiplied those by 2 times because the employee and the employer part. And then I went back to example number 1 and did the same thing, multiplied each by 2. So when you add up the two amounts, that is how much we owe to the IRS, $509.60. Okay, now we're gonna do this in a real condensed type payroll register. And we can just fill it out here on my notes. We don't necessarily, you can go back to your Excel sheet and use that if you would like. Notice I've kind of taken pieces of the Excel sheet. We'll put I don't have anything in prior wages because I go ahead and just give it to us. So we're gonna put what did we currently make? How much of what we currently made is taxable for Social Security? And then how much Social Security do we actually take out of the paycheck? How much Medicare do we take out of the paycheck? And then how much do we actually pay this employee? So I want you to think about it. We're going to put here for employee A, Amy, her wage was her wage is $7,000. And employee B, their wage was $7,400. Now, taking that information, figure out how much is left to be taxed for Social Security for each person, maybe all of it, maybe none of it, or partial. And then figure out their taxes as well. So this one will take you a few more minutes, take you 4 or 5 minutes. Go ahead and pause the video, and then we'll go through the answers. Okay. Let's look at Amy first. Amy had 7,000 as we had discussed. Out of the 7,000 though, only 3,200 is taxable. And I can bring up, I'll just do it on a calculator here so I don't have to go up and down on the screen. But if we took, and most of you could probably do this in your head, but we'll do step one, the 129,700, former wage plus current wage. That takes us over the Social Security cap. So I know that only partial wages are going to be taxed. Now I want to forget this number, so I'm going to clear it. I want to take my cap number, my top Social Security cap, and then simply subtract it from our current wages. That comes up with $3,200 that's left to be taxed. So 3,200 at 6.2%. Now notice for Medicare, I don't use 3,200. I use 5,000. No, not 5,000. The whole 7,000 at 1.45%. And then to get net pay, this you will have to, and we'll see this as we get into payroll registers next week as well. This amount here is only to help me calculate this tax. Once I have this, I don't need it anymore. So I'm always going to revert back to the wages, their actual wage. So this individual had 7,000 in wages, minus the 198.40 in Social Security, minus the 101.50 in Medicare. So they're left with that $6,700 of net pay. Now for Bob, if we look at this number, he's already over the Social Security cap. He hit it his last pay. So therefore, for Social Security, nothing is taxed for Bob out of his $7,400 in wages. So the amount of Social Security tax withheld is nothing. Medicare, they take the full $7,400 at 1.45%. And then the reason why I totaled these is because in the next part, I want you to journalize. So if you didn't journalize yet, go ahead and pause the video with these numbers and go ahead and make the journal entry, both of them, for the employee and the employer. All right, for the employees part, we know the actual wage expense is how much in total wages were earned, so $14,400. We take out the Social Security that we need to, the Medicare that we need to, and this is a very, just very small journal entry, just because we don't have all the other taxes. That's not what's important right now. We're just trying to figure out Social Security and Medicare and what those look like in the journal entry. But otherwise, this one would be longer. We would have federal withholdings and state withholding, county, and any other items that are withheld, like medical premiums or 401k that you have for retirement being withheld. But notice these numbers all match up to my payroll register. That's the whole reason we do a payroll register. So it makes the journal entry very simple. Now we're ready for part two. For part two, it's really simple. Remember, this one we do not know. We have question marks here until we figure out how much our Social Security and our Medicare are added up. And then we would add those together, and that is our payroll tax expense. All right. I'm going to go now past. This was kind of a review. You need to read through this, but just a little bit of review of the independent contractors we talked about in our previous video. Are you paid by the job, furnishing your own tools? And then the next thing that I wanted you to know about is there are a few workers out there who are exempt from paying FICA. That means they don't ever have to pay it. Not only do they not take it out of the employee's check, but like an independent contractor, they don't have FICA taxes taken out. That doesn't mean they're exempt. they have to pay it later on when they file their actual tax return. However, these different types of positions do not have to ever pay FICA taxes. So those of you watching this, if you're working at your college, you should not have FICA taxes being taken out, and surely you would be less than 40 hours. That would, to me, was the most relevant, so that's why I have that one highlighted. And then you can see all the different types of wages. This is going to be pretty important that we know this section, and especially where I have highlighted down below. All the different things that are taxable for FICA, basically just think of anything that you get money-wise is taxable, except if it's especially excluded. It has to be excluded for it not to be taxable. But you can see some of the items that are definitely taxed. Monies that are taxable, and I put this one and underlined it, so it's a pretty important one. Even though you put money aside for your 401k for retirement purposes, that money is still taxed on your payroll check. Now, we're going to see that that's not the case when we talk about federal and state income. If you put money aside for your 401k, you're taxed on it for FICA purposes, but not for federal income tax purposes. That's going to be so important to remember, and something that comes up quite often, as you could probably imagine, in everyday life. Lots of people have money put away into their retirement accounts, and it's got to be remembered that that money is taxed currently for FICA, but not for your deferred compensation plans like a 401k. And these are items specifically outlined in the tax law that are not taxed for FICA. And let's just go through the ones that I have definitely highlighted. Anything that your employer puts into your 401k, so you put money aside, but then a lot of times your employer will match it, that is not taxed for FICA ever. Not now and not later when you take it back out of your FICA, when you take it out of your retirement account. It's not taxed for FICA. If you put money aside for a medical premium, that is not taxed for FICA, and we're going to see quite a few examples of this. So what I mean is, if you earn $1,000 in gross wage, but then you have $100 taken out for medical premiums, your taxable piece, the gross wage will say $1,000, but for your Social Security taxable would only say $900. You're not taxed on that last $100, which is a good thing. You're paying less tax on money that you are specifically paying for premiums. The government is giving you a break, not making you pay tax on that. Same with flexible spending dollars. Money that you put aside for flexible spending, you get to pay that dollar for dollar to pay off your medical debt. You don't have to take out taxes on every dollar. You get that dollar 100% because you're not being taxed on it. Same with that. Flexible spending and HSAs are very, very similar. They're both designed to help you pay for medical expenses. There's a few little differences that we can get into, but I'm not going to at this moment. So what I want you to do, and this would be a good time to use, you could use your payroll register, or you can use the one that I have down here. It's not as detailed as the payroll register you made, but this one will work for just our example. What we're going to do is we're going to show how much did this employee make, how much is taxable. And before we start, I'm going to take, this number should have been changed. 129.1, I was thinking it was. So let me change this. 129.1, I'll have this changed in yours for your updates. Okay, so using these amounts, I want you to go through and determine, so we're going to look down here at the payroll register. Connie, her wages are $6,900. But for Social Security, she isn't going to pay $6,900 because she hits the cap, but she also has some money taken out for different things. And so we need to decide which items can we count as not being taxed and which items doesn't matter that they're taken out. So we'll go through this for Connie just to make sure you have it down. Now, if you want to, go ahead and pause now and try it yourself. But then here in a few seconds, we'll go ahead and go through it. So pause it and give it a shot, and then we'll work through the answers. All right, so for Connie, what I first want to do is determine, all right, we have $2,500 in actual wages. Then let's bring up my calculator. The 2,500 says she has 170 taken out for 401k. Well, that's all good, but we don't get a break on that for taxes, for Social Security and Medicare taxes. So I can't do anything with that 170 right now. I have to leave it out. The 220 for medical premiums, that is something that is specifically excluded for FICA taxes, so I can reduce $220 of taxes. 200 put into my medical flexible spending account, that is another one that's specifically excluded. So I can take the 200 out. 180 for child support, that is not excludable. I do have to pay tax on that. So when I add this all up, I only have to pay tax instead of on 2,500, which would be a higher number, a higher tax. I only have to pay tax on the $2,080. And then since the cap wasn't hit by any stretch, or there was no cap for Social Security, we're not even close to it, Medicare is going to be the same as Social Security. So I'm going to simply take the 2080 now times 0.062, and that is my Social Security. And then for the Medicare, I'm going to do the Medicare amount. And when we begin to do the actual payroll register, we're going to have each of these other deductions lined up specifically so we know how much goes to each, because that's important to know who we have to pay and how much. Each vendor that we have, 401k, medical spending, flexible spending, medical premiums. But here, I don't have all that room to do that, so I just lumped them together. So we had the 170 in 401k, the 220 medical, flexible spending 200, and then 180 in child support. So we had $770 of miscellaneous things taken out of our check. So if we take the 2,500, that's where you want to revert back to. These guys just kind of go away after we've done the tax work. 2,500 minus the tax, minus the Medicare, other deductions, net pay is only $1,570.88. All right, now let's look at Dylan. Dylan has a gross pay of $6,900. We're actually going to have to do two things with Dylan. We're going to have to figure out how much does he get taxed for Medicare wages, how much is taxable, and then how it's going to be a different number for our Social Security, as we'll see. All right, let's go ahead and do the Medicare first. So we take the $6,900, our starting point, subtract out, or should we subtract out the $750 for 401k? And the answer is no, we don't want to subtract that out. That is still taxable. But we do subtract out the $500 for medical premiums. And we can subtract out the $500 for dependent daycare flexible spending. That's allowed. It's irrelevant to our tax purposes that the employer matches. That's a good thing, and that's something the employer has to worry about. But for us, that doesn't have any factor in us paying taxes. So how much is actually taxable is $5,900 for our Medicare. But notice it's not the same for Social Security. And that's because if we took $5,900 and added it to our starting point, 5,900 plus the 129.1, that takes us over the cap. So then I want to backtrack and figure out, put the cap in minus how much are we at now. 3,800 is what's left to be taxed for Social Security. So 3,800 times the 6.2%, 5,900 times the 1.45%, all of the deductions added up, then take our gross wage minus these three amounts to get our net pay. Now we can begin to do the journal entry. And the journal entry is where these guys are going to come into play. The employer matching. We're gonna look at how that is journalized at this point. So go ahead and do the two journal entries that you should already know how to do, the employee and the employer part, and then we'll look at the matching part and what that looks like. All right, for the journal entries. This is what you should have had. And notice it does match my payroll register. The one thing I can look at pretty quickly is the amount of cash or net pay paid out. They match the $63.99. Social Security, we got the 115, and then I went ahead and broke these down because this is how we're normally going to do it. Instead of lumping them all together as other, again, in the Excel sheets that we made out, we're going to have categories for each one of these. So I want to get used to having a separate payable to each of these type of companies, or the government in this case, the child support. Then I come down and I'm ready to do the employer side. They only have the two, the Social Security and Medicare. So that is the payroll tax expense. Now for the 401k. I tell us up here in the instructions that the employer matches the 401k and medical premiums. So I figure out what's the 401k. We had 170 and 750. If you add these two up, you get 920. So the employees had 920 taken out, and so the employer is going to match that. So we're going to create a separate expense shows exactly that. An extra 920 coming out of the employer's pocket. That's why it's an expense. And an additional going into the payable, the company that we're going to have to pay, say it's the Hartford or TIA, CREF, we're going to pay an extra $920 into that employee's account, or all of our employees' accounts. Same thing with the medical premium, $720, because if we would add up the medical premiums up here, we had 220 going into medical premiums and 500. So that was the $720 going into the medical premium, and the employer matches the same amount. Now the last thing that I have here on this problem is, it says assume the Medicare premiums are paid and the FICA taxes are paid on 115. So we would have been, in this case, we want to go back and maybe make some brief T accounts. But let's go ahead and do the medical premiums first, since that came up first. Medical premiums of $720. And then we had another medical premium of $720 that we have to pay. So come 115, the two 720s added up is $1,440 that I'm getting off of my liabilities because I'm actually paying it with my cash. And I'm going to do the same thing with Social Security and Medicare. Social Security and Medicare, I'm going to come up, I'm going to add up my Social Security, my two of them, the 364 and the 364. If we add those two up, 364.56, and let's just take that times 2, 729.12. You can see that's where I got this number. I debited my Social Security payable. I do the exact same thing for Medicare and then add them up to see how much do I need to pay the Medicare. And then I would have wrote a check because Social Security and Medicare, that money goes to the same, we write the check to the same place. So we write check to the Department of Treasury, and then we put on there that's for our FICA taxes, $960.54. Okay, we're about done with this week. Just a couple, few things here that I want to emphasize before we sign off. If you need to take a quick break, this would be a good point. We're kind of at a new place. We don't have much left to go, maybe 10 minutes at the most. The self-employment and independent contractors. Remember, independent contractors are not exempt from FICA. They still have to pay it. Whereas like remember, the student working at a college doesn't ever have to pay it. So how do they pay it? They actually end up paying it through their 1040, and it's calculated on what's called a Schedule SE. Schedule SE is a piece of the 1040. It's like a Schedule A or a Schedule C. It's an offset of the 1040, and then the final amount that you get from the Schedule SE reverts back to the 1040, and it shows how much you owe in your FICA, or what they call self-employment taxes. The self-employment taxes is nothing more than the FICA taxes. All right, so when we prepare the Schedule SC, that's what we're doing. So you must pay your FICA taxes as well as additional federal withholdings. If you're an independent contractor, you have to do this quarterly. You pay in quarterly instead of every paycheck like you would as an employee, every 2 weeks perhaps. So how this is done, what I've brought up, and it's something you may want to do when you're asked about having to calculate Social Security tax. The easiest way is to simply do it right here on the form. We're not gonna have farm profit or Part 1B. Most people are gonna go right to box 2. You had net profit from your business, which is Schedule C. And you're gonna put that down here. And then notice they give you a tiny bit of a break. They say you don't have to multiply all of what you made, your profit. You only need to multiply by 92.35%. You think, well, that's a weird number. How did they get that? Let me show you. If you take 0.062 for Medicare, Social Security, and then add in 0.0145 for, that's actually Medicare. If you add these two together, I don't know what that is, 1.45 plus 0.062, you get 0.0765. That's how much you're paying, 7.65% of your check. If you subtract 1 from this for 100%, notice that number you get, 9235, which is the same 9235 as right here. Basically, what the taxes, the IRS here is allowing you, it's kind of treating you like an employee and an employer. You get to have a little bit taken off. You're not considering this income, because you would normally get to take this off as a deduction from your net income, because you're having to pay the tax for your employee, which is you. So they're giving you that little bit of a deduction right here. So once you take off that deduction, let's say you had in wages $1,400 and you took off that 0.9235 out of the $1,400, you're only having to pay tax on the $1,292, so you get a little bit of a break. And then notice they want you to take this $1,292 once you get here and then multiply it by 15.3%. 15.3, so you're actually paying Social Security and Medicare tax at $197. And that's for you and the employer part. And then you think, well, 15.3, where'd they get that? Well, if you go back to 0.062 and then add in the 0.0145, and if you times that by 2 for the employee and the employer parts, that's the 15.3%. All right, so that's a brief overview. I don't want to take too long a time on that. The final piece here, and we're going to talk primarily about this next week, is when it's time to get ready to pay your FICA taxes as the employee or the employer, as the employer, you got to know, when do I need to pay them? Do I need to pay it every week? Do I need to pay it every month, every quarter, every year? It all depends on that look back information. The look back time is from your 4 quarters ending last June 30th to the previous July 1st. That's going to be your look back period. And then however much taxes you had paid during that time, or should have paid more realistically, doesn't matter if you paid it or not, it's what did you have due. That's going to determine how often you have to pay your taxes. All right, so the amounts here start. If you paid or should have paid $50,000 or less in payroll taxes, that's your that includes all 3 now, the Fed and the FICA. Then you only have to pay those 3 taxes once every month. If you collected more than $50,000, then you have to pay bi-weekly. Okay, so every other week instead of every month, you have to make payments. And if you're a really, really big company and you ever have $100,000 that's due in payroll taxes, because every paycheck, every time you pay, you collect over $100,000 between what you have to pay and the employers kick in, then they have to pay the next day. They have to make a deposit. If you're a really, really, really small company, so this is a really big company, if you're a really small company and you not only have less than $50,000, but you have less than $2,500 in any quarter, then you don't need to pay until the end of that quarter when you file a 941. All right, so you file a 941 every quarter. You file it by the last day of the month of that next month. So if it's the first quarter, it ends March 31. It would be due by the last day of the next month. So that would be April 30th. But if you made all your deposits on time, they give you an extra 10-day extension. Therefore, you would have until May 10th, the first quarter. All right, that winds up our week 2 material. The items that you have due, you have a discussion board due. We have the 2 quizzes. We don't have anything in Excel this week that has to be turned in. Next week, we'll have a more in-depth Excel payroll register with 941. But this week, I do have some practice exercises out there in my lecture area, and then I'll have the answers posted as well. So with that, we will sign off, and I'll see you for week 3.